So if you've just moved to the UK and you want to start building your wealth or your portfolio fast but safely, stay with me. In this video, I'll show you exactly how small, consistent contributions can transform your financial future. You're welcome. Welcome to the UK. Let's talk money. The UK financial system is one of the easiest for beginners. No complicated paperwork, no massive minimum amounts, and lots of tax-free options as well. And if you have read the book, I Will Teach You to Be Rich by Ramit Sethi, you already know you don't need to be perfect. You just need to get started and remain consistent. In the UK, start with the basics. An ISA account, individual savings account. An ISA is probably the first account every immigrant should know about. Why? You invest or save tax-free, no tax on any capital gains, no tax on dividends, no tax on interest. So, the types of ISAs to consider: cash ISAs, lifetime ISAs, junior ISAs for children, stocks and shares ISAs. So, within a stocks and shares ISAs, you can buy exchange traded funds, also called ETFs. You can buy individual stocks. You can buy exchange traded commodities. The good thing about ETFs is that depending on the one you go for, they can give you multiple exposures across multi-sector or multi-geography exposure. For instance, emerging worlds, developing worlds, or the US stock market, the UK stock market if you're buying FTSE, or the S&P 500. Different ETFs gives you exposure to different commodities, different stocks, different bonds, and also multi-exposure means sometimes reduced risk, diversified portfolio based on sectors and categories, and geographical diversification. If you follow Ramit Sethi's advice from the book, I Will Teach You to Be Rich, you will set up automated investing and forget about timing the market. There is this saying in the trading and investing landscape: it's not always about timing the market, but your reward comes from the time you dwell, the time stayed in the market. Patience, long term, will always win over short term. Think long term. Time in the market, not timing the market. So if you can set up automated investment, you're halfway towards winning. Your financial future will thank you. Number 3, lifetime ISAs. If you are below the age of 40, you can open a lifetime ISA. And with this, the government tops up 25% of your contributions up to a maximum of £4,000 contribution every year. Please go to the gov.uk website to verify all these products. Now, you can't withdraw from this account unless you are buying your first home or when you are retiring. Please go to the gov.uk website to verify the retirement age for this lifetime ISA account. And the good thing about it is that you can either hold this money in cash or you can invest it in ETFs or bonds or stocks, depending on your provider. So for immigrants planning to settle in the UK, this one is huge. It's like the UK saying, welcome, here is free money, get your life started. Premium bonds, it's not necessarily investing, but it's a useful information to have. Some financial experts don't consider premium bond an investment portfolio or advice, but hey, it's information, so grab it. Premium bonds are offered by the National Savings and I, a cool way of saying HM Treasury. So instead of your money to earn interest, the interest enter a monthly prize draw. Now each person can have up to a maximum of £50,000 deposited in their premium bonds account. Once again, go to the NS&I webpage to get more information on this. So your money is 100% safe as it is backed by the government. There is no tax on your winnings. And 2 people monthly can win 1 million, and lots of people can win 100k, 50k, 20k, 10k, 5k, and lots of smaller prizes. The odds of winning should be maybe 1 in 22,000. I'm not sure. go to the NSNI website and verify. It's not so good because your returns are not predictable and it's not really ideal for long-term investing. It's okay maybe for short-term investing, or you just have that money. Okay, I'll leave it there and that's it. Some people don't class it as an investment because remember, someone who invested £1,000 in some stocks 10 years ago already have 400,000. So some people may not consider premium bonds an investment because sometimes the money might win nothing. The fifth one is a SIP, self-invested personal pension, SIP. So this is a way of adding more to your retirement pot. So a self-invested personal pension lets you control your retirement. Normally, whatever money you deposit here, the government tops up another 20 or 25%. And if you're a higher rate tax earner, you can get up to 45% added after your self-assessment. So you just have to make sure that you don't exceed your overall pension allowance, both your workplace pension, personal contributions, and in your SIP, everything should not exceed the annual allowance by the government. Again, go to the gov.uk website, type in self-invested personal pension and know per year or per tax year what is the annual allowance, what are the rules that are applied. So I can't give any figures because this video is going to stay up on this channel for years to come. It's for you, whenever you see this video, go back and verify what is applicable today for me. Things change a lot in the UK and globally. Number 6, a junior individual savings account, junior ISA. The maximum for this one currently is 9,000. Again, whenever you watch this video, go online and check what is the maximum allowable limit each year. Currently in 2025, it is 9,000 per child. So if you have kids, junior ISA allows you to invest up to £9,000 currently in the year 2025 per year, tax-free for each child. So by the time they are 18, the compounding effect can be massive. Remember, Ramit Sethi always advocates for the principle of compounding. Let compounding work in your favor. Relax. Even with small monthly contributions, some people use this to set up university tuition funds for their children, their first house deposits. It all depends. £50 monthly, £10 monthly, £100 monthly, £200 monthly for each child. It all adds up. Start today. Number 7 point, compounding, the money superpower. Compounding is simple. Your money makes more money. Your money makes money. And that money that your money made makes more money. It's just a way of saying your money has a child and that child has a child. So your money can have grand or great grandchildren. Your money makes more money and that money makes more money. Compounding. There is this saying that the most difficult amount to make is probably your first £200,000 or $200,000, and that after that it multiplies quickly because the principle of compounding is at work. So let's take this scenario. If you invest £100 per month in a global ETF, earning with an annualized return of 7%, assuming after 10 years, you're going to have approximately 17,000. After 20 years, it's going to be 52,000. And after 30 years, you're looking at 122,000. This is just from saving £100 per month, which is equal to £1,200 a year. And in 30 years, you are looking at 122,000, assuming an annualized return of 7%. That's a lot because if you're talking about 1-2 per year, in 10 years, it's supposed to be 12K. In 30 years, you're supposed to just have 36K. But with the principle of compounding, you're looking at 122K. Let compounding work for you. And this is with a mere 7% annualized return. So this is why the real key is consistency. Not how much, but how well, how you continue. Frequency, consistency. This is the foundation of Ramit's system. Automate your finances so that money grows without your willpower. We don't need your willpower. Automate it. Passive investing and auto investing. Most immigrants are busy, and we get it. They are busy working, studying, supporting family back home, aka black tax. And if you don't have time to pick the stocks, this is where passive investing works for you. You look at low-cost ETFs with low expense ratios. Automate your monthly contributions. Ignore the market noise. Up today, down tomorrow. You don't care. You just keep putting the same amount, the same time every month. And sometimes let dollar cost averaging, DCA, work in your favor. And let compounding work. Let it do its magic. So you have platforms like Vanguard, Trading 212, eToro, Hargreaves and Lansdowne, AJ Bell, Robinhood, Moneybox, Free Trade, Nutmeg. There are lots of them. Even your standard traditional bank apps, they are all helpful towards helping you automate your investing. So if you are new to the UK, this is your chance to build wealth the smart way. Start today. Even with £10, even with £20, start today. Your future you will thank you. The earlier you begin, the easier it becomes and the more it becomes a habit. If you want more videos on UK money, investing, and building a financial life as an immigrant, hit subscribe, drop a comment with your questions, and share this with someone who just moved to the UK. See you in my next video. Bye.